to my way of seeing end of calendar 2024, we could be at 100, we could be at 300. I doubt we're below 100. I highly doubt that. That's, from 60, that's a 40% move or a little higher. That should be pretty easy, 50% move. That should be pretty easy from here. Michael Saylor said all your models are broken. I think he's kind of right. We just don't really know how it's going to behave.
Lawrence Lepard begins by emphasizing the monumental impact of the Bitcoin ETF launch. He explains that this move opens the door for a massive influx of capital into Bitcoin, which previously struggled to access the cryptocurrency market. Lepard is optimistic about Bitcoin's potential, forecasting that by the end of 2024, Bitcoin's price could range anywhere from $100,000 to $300,000. He acknowledges the inherent uncertainty and volatility of Bitcoin, noting that while short-term fluctuations are unpredictable, the long-term outlook remains promising. Lepard discusses its potential for significant short-term price swings. Despite this, he remains confident in Bitcoin's long-term performance, believing it will continue to outperform traditional assets over the coming years. He suggests that the rise in both Bitcoin and gold prices indicates growing awareness of impending monetary issues and the limitations of central banks and governments in addressing these challenges. Please take a little time to like this video, subscribe to the channel, and turn on post notifications for more videos like this. You can also check out our other videos on cryptocurrencies and the overall digital asset space and drop your comments and observations in the comments section below. Everything you do helps with the YouTube algorithm and immensely contributes to the channel's growth. Thanks and enjoy the video.
So I agree that the ETF launch is a really big deal. I mean, it allows a huge pool of capital that could not easily buy Bitcoin to now buy Bitcoin. So, to be honest with you, I'll give you the spread. To my way of seeing end of calendar 2024, we could be at 100, we could be at 300. I have no idea. I doubt we're below 100. I highly doubt that. That's, from 60, that's a 40% move or a little higher. That should be pretty easy, 50% move. That should be pretty easy from here. To their number of 2025, 250, yeah, that sounds possible. It's very hard to know. It really is. And there are a lot of models, there are a lot of ways of looking at it. I look at them all, I weigh them all, and then I say, you know what, it's a new thing. I think Michael Saylor said all your models are broken. I think he's kind of right. We just don't really know how it's going to behave. It would not surprise me at all if it shot up to 250 quickly. But it also wouldn't surprise me if, a year from now we were only at 110. It's just, you just don't know. Long term, I'm highly confident that it will continue to outperform and be much higher. And by that, I mean by the end of this year and next year, the following year. Short term, it could do anything it wants. As you know, it's quite volatile. I think what's going on in Bitcoin is just the knowledge, very much like gold. And I do consider, gold is 5,000-year-old money. It's the soundest form of money ever until Bitcoin came along. It's analog sound money. Bitcoin's digital sound money. And I think that what's going on there is you're just seeing more and more people becoming aware of the fiscal and debt problems that the world has and looking for an escape hatch. Gold's one and Bitcoin's another. Turns out Bitcoin has performed better than gold. So, younger people tend to aggressively go towards Bitcoin. But as you point out, it has been correlated with the NASDAQ. It has been correlated with risk on, and it does tend to have pretty wide swings. And so it's not suited for everybody. There are people who, prefer not to have the volatility, and they might, and they're looking for a sound alternative. They might choose gold. In turn, if you're looking for the most rapid growth on a performance basis, Bitcoin has clearly been the better choice for the last 10 or 15 years, and I think it will continue to be a better choice. So, but it's come along too. And to me, as I said, I think earlier, these are both the canaries in the coal mine. The fact that they are both up as big as they are, Bitcoin's up 66% in the quarter. Oh my goodness, that's a big number. Gold was up, 13, 14% in the quarter. That's a good number too. Just annualize those are huge numbers. So something's going on here. The fact they're both up together and the stock market wasn't up that much. Something's going on here. And what I submit is going on is a larger percentage of the world is becoming aware of the monetary problems that are about to emerge because the Fed is trapped. And I think at the end of the day, they can say they're going to go higher. They can say they're going to go lower. They can talk all they want. They can jawbone. They do all kinds of things. They lie about what they're doing. But at the end of the day, if push comes to shove and the choices are do nothing and let the system collapse, or print money and create new programs to accommodate, the system and dilute the value of the dollar, through debasement, the politicians, they will always choose option two, because as we saw in 08, in 2020, in 2019 with the repo blowout, in March of 2023 with Silicon Valley Bank, they are not going to let the system collapse. Full stop. They can't. They just won't do it. But what makes it so hard for all of us is they tend to, in the interim periods, they tend to talk tough and, imply that, oh, they've got it all under control and we're going back to 2% and da 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 da. But, again, I think what's going on is gold and Bitcoin are saying bullshit. You guys can say all that stuff. Yeah, we hear you. That's what you're saying for sure. But you know what? Bullshit. We don't believe it. We'll take the gold and Bitcoin. At the end of the day, the block reward, whether it's 6.25 or 3.125, it's the difference between 900 Bitcoin a day and like 450 Bitcoin. That's not the biggest determinant of demand, in my view, of supply and demand in the market. That's a small number compared to the 19 million coins that are out there. It has an impact, and historically, there's always been a price run after a halving, if you look back historically. So I fully expect we will have a price run. But if you actually also look back carefully, you'll see that in some of the prior halvings, it actually went down for a little bit before that price run began. It took a while. There was like a lag effect for the halving to have an effect on the price. And so it's entirely possible to me that would occur again in this particular time frame. As I said, Bitcoin's a wild animal, and you just don't know on any given week, day, month what it's going to do. I mean, it could go to 50, it could go to 80. I mean, I have no idea. I will say this. I will say this, though. I have great confidence that in a year or two, it's going to be much higher than it is today.
Lepard criticizes central banks, particularly the Federal Reserve, for their handling of monetary policy. He argues that despite their rhetoric, central banks are likely to continue printing money to prevent systemic collapse, as seen in past crises like the 2008 financial crash and the 2020 pandemic. This, according to Lepard, fuels the rise in Bitcoin and gold prices as investors seek refuge from currency debasement and inflation. Lepard explains its historical significance in driving price increases. However, he cautions that there might be a lag before the price responds to the reduced supply of new Bitcoins. He emphasizes the unpredictable nature of Bitcoin, suggesting that while short-term movements are uncertain, the long-term trend remains upward.
A lot of people have said they're very correlated. And if you look backwards, there has been a certain amount of correlation. It trades like a risk asset. But I do believe that over time that's diminishing. And I think over time they will completely separate, where you could actually have the NASDAQ not doing well and Bitcoin doing well. But Bitcoin's a measure of liquidity, and the NASDAQ is tied to liquidity as well. So it's going to take time for the two to separate. But I do believe over time they will separate. But if they print a lot more money, I mean, my new base case, I've kind of revised this. I used to think we were going to have quite a big market downturn and quite a big recession. I'm actually, and maybe we will, I'll be wrong again, but I'm now, based on what I'm seeing, I'm now kind of starting to think, you know what? We're actually not going to have that big a downturn, that big a recession. We're going to have a pretty hot economy. It's going to be pretty healthy. The stock market could go higher. There'll be a lot of good things happening, with one exception. We're going to have serious inflation. Because they're going to have to grease the monetary skids. The velocity is going to pick up. And with those changes, there's no way you get out of this inflationary trap. And so it's entirely possible that the Fed ultimately starts thinking maybe they have to hike rates further. I don't know that they'll do that. But, as you pointed out earlier, they've certainly backpedaled from a lot of rate cuts to very few rate cuts based on the strength of the economy. And so the new data that we all have, because we kind of all thought there's got to be a recession coming here, and there hasn't been in a big way yet, right? Gold price, I think it's really important to talk about the demand that's coming out of China, because, and I talked about this in my quarterly letter, we show a chart in there. I mean, one of the things I find very interesting is that the largest gold ETF, GLD, is actually shrinking in size, which suggests that North American investors are selling, on balance, selling gold. I mean, this ETF is getting smaller. And yet, gold is going on to record highs. And why is that? Well, also in my quarterly, you could see a chart that shows that China has really stepped up their purchases of gold at both the government level and at the individual level. And I think China's been encountering some economic turbulence in terms of their economy, in terms of their real estate, in terms of their stock market. And so I think what you're seeing is a very strong bid. I think, well, one, I think that China at the governmental level is trending toward gold because they realize that the dollar as a neutral reserve currency is not as good as it used to be since the U.S. decided to seize the Russian assets. And I think that China at the individual level, people are realizing that real estate's not the investment they thought because it's not working, and perhaps stocks are risky, and so you see a lot of gold purchasing. So to me, and I'm not sure really, I don't think that kind of purchasing is driven by, drones in the Middle East. I think that's just pure, what's going on in their economy. And remember, China's an enormous economy. I mean, you're talking, 1 billion people, right? A lot bigger than the U.S. So to me, that's kind of the gold story. And the other place where you can see it, it's very interesting. It depends on which exchange you use over there and what you look at. But if you follow all the gold Twitter people and the ones who are looking at China carefully, lots of various ways of purchasing gold there are trading at premiums over melt value, which suggests to me that there's really strong demand to get a hold of gold, even if they have to pay a little more than melt. So that too supports the kind of this demand is coming from China side of things. And finally, I'll just add the Luke Gromen thesis that you're starting to see all these BRICS countries, and we've added a lot of countries to the BRICS. You're starting to see all these BRICS countries denominating their oil purchases in their own currencies, as opposed to the U.S. dollar, the petrodollar. And so that, leads to, yuan paying for oil and the yuan being a currency that's getting accepted by the oil producers. And if those oil producers don't have things they need to purchase from China denominated in yuan, well, they might think, hey, okay, fine, I'm not sure I trust the yuan, I'll just swap it into gold. And it's easy to do with the Shanghai Gold Exchange. So you're really kind of seeing a changing of the guard, I think, in terms of what it is the neutral reserve currency. And it always used to be the dollar, but that's kind of, and that's not going to disappear overnight, by the way. But the trend is in a direction that's away from the dollar. We can clearly see that.
Lepard shifts focus to the gold market, highlighting China's significant role in driving demand. He notes that despite North American investors selling gold, prices continue to rise due to strong demand from China. He attributes this to China's economic challenges, such as issues in the real estate and stock markets, prompting both the government and individuals to increase their gold purchases. Lepard believes this trend underscores a shifting global dynamic, where countries like China are diversifying away from the US dollar. Lepard concludes by discussing the diminishing dominance of the US dollar as the world's neutral reserve currency. He cites the increasing trend of BRICS countries conducting trade in their own currencies, reducing reliance on the dollar. This shift, he argues, is part of a broader movement away from dollar dominance, facilitated by mechanisms like the Shanghai Gold Exchange, allowing countries to swap their currencies for gold. Please like and subscribe my channel.